Yeah, you guys have got me today hosting because Follis and Osborough are away, chilling out in their hotel rooms in Manchester. Lucky them. Whilst we're watching the markets. I mean, it's been pretty good lately. I think the volatility that we've had this week has been really nice. There's been some pretty good trading to have. So yeah, I will say welcome everybody to this week's edition of the Chroma Roundtable. I realize I'm the only one with the webcam on this time as well. This is weird. So you guys just have Virgie's turned
Especially
his
for
on
you,
as
man.
well. Yeah, thank you. So yeah, welcome everyone. Welcome to our, as Forrest would say, our panel of Gigabrain Chads that we have in the room today. We've got Pergy, we've got Bitbei, and then we've got Follis and Osborough joining from their hotel, so they'll be with us for a little bit. Not sure if anyone else is going to join us later. I know Jedi is busy as well. So yeah, we'll see how this goes. But yeah, let's kick things off then with, Bitcoin. So we've had a pretty decent increase in volatility this week, a nice move up. Bitcoin now, pretty high probability. We discussed this on the roundtable last week about whether we thought that this month would close green or whether we would close red, and we're up 10% already on the month from our monthly open. So pretty high probability that we're going to end finally this 5-month losing streak that we're in. We've had 8 green days in a row. Polymarket odds are giving us a 52% chance of 80k this month. That is, it's still a little bit of a way off right now from that, but I think, the market's certainly looking a lot better, and a lot of the fear that we've had from the last couple of months has definitely subsided. So I guess we'll kick things off with those of you who are, well, it's Perju and Bitbei who will be able to share their ideas, mainly unless Osborough and Follis want to join in just on the mic. But Perju, what are your thoughts?
I'm pretty positive about the markets at the moment. I can't share my screen at the moment because I'm somewhere else. And I forgot I took my extra screen with me, but I left it in the car, and otherwise I would have been not able to join the roundtable. So I'm just talking you through it. For now, I think we have FOMC tomorrow. So I think we see, like we saw today, we're a bit chopping around the 74k mark. Also, Ethereum has lost that 2350 level that it was trying to reclaim yesterday. So I think we see some more de-risking into Asia session later tonight. And ideally, I hope that we get like around 2200 for Ethereum going into the FOMC. What I don't like to see is that we're starting to pump tomorrow or like in Asia later tonight, because I think that would mark like a small local top if we go into 75, 76k going into FOMC. Usually pumping into FOMC is not a great sign. So hopefully we get some de-risking in Asia and London session tomorrow, and then we see volatility pick up, of course, at the FOMC tomorrow.
Yeah, do you have any price targets that you're looking for? So if we do get a bit more of a pullback during the Asia session as we go into FOMC, is there any nice points of interest that you're looking for a potential rally?
Yeah, ideally, I want to see a retest of the 72.6 level, like that impulse candle that we had last Monday in late Asia session. I think if we backfill that a bit into that 72.5, 72.3, and then we can trade it back towards 81, 82k. I think that's another really nice opportunity for a 10k move on BTC if we get that pullback tomorrow or later tonight.
Cool. Bitbei, what are you thinking? Are you able to do a little screen share as well, or?
Yeah, I can screen share. I already shared my thoughts about it this morning, but I'm happy to repeat myself. There's a lot of similarities about what's happening now with what happened in 2022 when we had the Russia-Ukraine war, which marked the bottom, but didn't take the low. and then made only higher high and higher lows. One thing that's actually interesting to see is that I didn't know that until this morning when I realized with the chat that that was also the last moment. I mean, to verify if it was exactly the last moment, but the last moment we had 8 consecutive green candles, daily candles. That was after the war announcement from Ukraine and Russia, and this made a higher high, took all the liquidity that has to be taken there, and then after it kind of went back into the range. It never managed to like reclaim or touch the value area high, and then went lower because it's a bear market. So I have a much more bearish stance than Peryu, and I'm okay if I'm wrong. It's not a big issue about that. I just feel like this could, like, if it rhymes perfectly, today or tonight should, or tomorrow, let's say with the FOMC, should be the top, and then after we go back and resume the bear market. And speaking of poly markets, you said that the odds of what 80K was like 50%, something like this.
Yeah, 52%. It's like
Okay.
surged the last couple of days.
I bet 50K by the end of the month, but we'll see if I'm wrong.
Yeah, 50K.
Yes.
Wow.
That's my hot take, let's say. But obviously, if I'm wrong, I don't mind. It's fine. I didn't bet a lot anyway, but that's it.
Yeah, I mean, 50K is a long way down from here. That is, that's, yeah. But I mean, I think, yeah, I think I'd go. I mean, for me as well, I'm certainly not looking at this. We've spoken about this before. Really not looking at this being the end of the bear market and the rally that takes us to new all-time highs. I think 50K is, for myself, still a pretty good target to be looking at in the long term. Whether we get there this month or not, that would be crazy.
At the end, one good thing about poly market is like I don't necessarily need to wait for the resolution. And like, let's say if, for instance, in the 25th, we are the range low, and like people are overpricing the fact that we're going to get 50K, I can still sell my shares and have a pretty decent profit. So that was the idea. And the risk was like, I think 13 RR compared to like what I bet. So I think even if I can easily double that if we start to go down into mid range, and I can make a pretty decent profit from that. So it's okay.
So you're swing short already?
I'm waiting. I'm waiting for two. I mean, if you want, I can show a bit more about what I think about. I'm looking for two things. Either we go back below this anchored VWAP, and for now, it's not the case. That would be a strong signal that the market isn't bullish anymore, or as bullish as it was on this leg up. Or I'm looking for some kind of SFP around this zone. That would be a very nice short level. Obviously, this limit is not there. It's not set on my exchange or prop firms. It's just a trade idea that I have, and I will adjust based on what I see after the FOMC meeting.
Yeah, cool. I mean, I think for myself,
I can leave you the stream if you want to show something, Luke.
Yeah, I could do a little screen share as well, because we've got a few less of us this week. Then I can chip in and do some of that. Osborne, Follis, do you have any thoughts? I know you can't share, but what are your thoughts on the market in general, if you're able to talk?
Yeah, I can jump in here. I'll give my thoughts very quickly. I mean, I've kind of been pretty vocal about it over the last I guess over the last week or so. Like, my system works really well in range-bound environments, right? And it's a very simple system. It's a very rules-based system. But one of the golden rules of that system is that I cannot get bullish at range highs. Now, that means that when price breaks out, and I'm not saying that this is a breakout, but let's assume that this move carries us higher. Let's assume that this move carries us to 78K, 79K, maybe even 80K, something like that. I will probably get left behind for a lot of that move because my system says you don't long here. You don't look for that move. Instead, you wait for weakness and then you try and play for rotation lower, especially when the high time frame trend is still to the downside. Now, that obviously has its faults, it has its downsides. For instance, if we do go to 80K, I'm probably going to be left sitting there with my dick in my hand and no longs on the table. But that's just the downside of running a range bound system like mine that actually has worked extremely well over the last few months since we've kind of put in this high time frame downtrend since October. Oh, you like that one, did you? but the flip side of that is that I love hearing analysis from guys like Purdue. There's plenty of guys on my timeline as well. I was on a stream with Main and Ponzi Trader the other day. Ponzi literally top longed or quote unquote top longed at like 73K and he caught a nice move up to the upside. That's just not my style of trading. That's not something that I'm personally good at. So that's the disclaimer. That's the caveat I'm getting out of the way immediately. So when you listen to me say, "Oh, range high, practice caution here, no new longs, looking for downside," right? You have to take that caveat into account, right? I have my own style; it works for me, and sometimes I get left on the sidelines. That's just the way it is being a range bound trader. That's the way it is being a range bound maxi. Now, with that disclaimer out of the way, see, this is the legal mind speaking here. The legal disclaimer has been put into place. With that in mind, I am slightly bearish here because we're trading at range high, right? The high time frame trend is very clearly a downside trend. It's very clearly a bearish trend, and the structure hasn't even come close to breaking. Even though we have this pretty nice move off the bottom. I think it was like 59 point something was the bottom back in early February, and in a month, we've popped off. We're up to 74K now. So yeah, really nice move off the bottom here. Do I think that this is the low? Absolutely not. And I've already explained why I think that is in my channel a number of times, right? Mostly to do with time, average time spent in a bear market. Previous bear markets the last 3 bear markets have been like 50, 52, and 53 weeks, something like that. This current bear market, we're 22 weeks into it. So it would be the shortest bear market that we've had in over a decade, which I don't think is too likely, to be honest. I think that there are more reasons for it to be longer than shorter. I've also spoken about realized price. The current realized price, which is the average buy price of all Bitcoin holders, is about 55K. We have never, in the history of Bitcoin, we have never bottomed without trading below the realized price for at least 100 days, in some cases as high as 300 days. At the moment, we have not traded below the realized price this bear market, and we have spent 0 days below that realized price level of 55K. So I do think that we trade lower into the rest of the year. Does that mean that we don't pop off here? Does that mean that we don't trade up to 80K this month? No. In fact, I think that actually some mean reversion is kind of likely here. And I actually don't, I'm listening to guys talk about bullish ideas here, and I don't dislike them, to be honest. I think that it's very possible we see a move up to, high 70s, something like that, and then we'll get kind of a high time frame short play into April or May. I've often said that I think that March and April were going to be choppy months, and then we were going to get our downside in April or May, with the idea then that will be the continuation leg that maybe Bitbei was speaking about that will take us down into the 40s, into the 50s. So that's kind of my high time frame plan has not changed at all. The fact that we've had this little bounce, I still think I will be looking for lower prices into the remainder of the year. I'm still high time frame, like macro giga bullish on BTC. I still think we trade up back into the hundreds sooner or later, probably as soon as next year. But I do not think that the bottom for 2026 is in yet. Does that mean I'm shorting here, market shorting? No, absolutely not. I think this move has a decent amount of momentum and can carry quite a bit higher. But on the medium time frame, low time frame, whatever you want to call it, the price action over the last month, we are trading at range highs. Therefore, my system says this is where you practice caution, no new longs. The only real trade I'm looking for here is looking for shorts.
What I don't get though is that you have like the successful auction above the value high that you drew out around that 71K mark. That was your value high, and now we're actually successfully trading above that. So why don't you turn bullish then, like short term, if we're trading above the value high for you, around that 70.5 K mark, 71K mark? Like if that's your invalidation now, then you should be looking for longs, right? Because then we should search for new value if I get auction market theory correct.
Yeah, 100%. I think that that's definitely a convincing argument, and that's why I'm saying that when I'm listening to people with bullish ideas here, I don't dislike them. However, we had that exact same thing happen like 2 months ago. We had that exact same thing happen. Let me see if I can share my screen. Actually, hopefully this works. Sorry, I am on my laptop. Can you guys see that? Can people see that? Yes. Okay, perfect. Sorry, I'm manipulating this with my trackpad, so it's going to be a bit janky. So yeah, absolutely. But the point that Purdue is making here, and we obviously have our value area going back to the start of February. He's saying that this is your successful auction. The push up here, the retest, and prices pushing higher. In which case, now the play is to look for value higher. Absolutely. Do I think that that could happen? Yes. Very high likelihood, in fact. But we had that exact same thing happen back here a number of times, right? Where we had this value area being created. We actually had something very similar here, and then price pushed higher. We got a stall out, and then price went lower. I think for me, part of the reason why I'm leaning bearish here is because of my high time frame outlook. I don't think the bottom is in yet. I think like when you look at where's this chart? Yeah, when you look at this chart here, right? The chart going back to the 5th of October high, it's very, very clear and obvious which way the trend is going. And for me to fight that trend, I need to see a lot more from BTC. I need to see probably a lot more to the upside here before I start believing that the bottom is in. But yeah, for sure, I think the idea that you're discussing there, Purdue, would see us come back to potentially value here and something like this. If that happened, I would be fucking giga bullish. I would actually flip my bias at least for a couple of months. But yeah, at the moment, I just haven't seen enough to think that that's particularly likely. This price action looks exactly like what we got back in January, and you know how that turned out. So, but yeah, good point.
Yeah. Yeah, I think that the thing is you also have to work with seasonality. Like around April, May is always when historically BTC and altcoins pick up steam, like the good old sell in May and go away. So yeah, well, basically what you're saying is that you swing short from May on and probably into the summer and just leave it run. That could be a good idea, but I don't know how much higher we run first before we see that sell off in May, you know? Like if you kind of are in a 4-year simulation where we first had the Russia-Ukraine, that's something I see a lot at the moment on X, that we simulate that war with Iran now. So probably the big sell-off comes again in May, like every year, and everyone turns super bullish at the end of April, at the early May, and then we see the bigger sell-off. So yeah, I agree with you on that one, but I think we see higher prices first.
Yeah, I think if you think back to 2022, actually, there's an interesting parallel to be drawn where we saw the exact same thing. We saw some very sharp downside into the first kind of half of the year. We saw a summer lull, and you'll remember that massive zero volume, zero volatility summer that we had. And then it was like one last spike down in whatever it was, October at the end of the summer when the TradFi guys came back to their desks and, you know, returned from their holidays in Martha's Vineyard. And then we actually started the crazy upside. I mean, if you look back on the current, like the BTC cycle, like that was the start of that whole rally from whatever it was, $14,000, was that move up from the end of 2022, and like it was basically up only since then. I do think that something like that is potentially likely to happen, where we get the same idea, like a summer lull, and then a volume and volatility injection at the end of the summer, followed by higher prices coming into 2027.
Yeah,
that's me. Thank you.
I think I have similar thoughts. Oscar, I don't think you can't share screen, can you? But is there anything you want to add? And then
I can talk. It will be quite similar to what you guys think. I mean, look and follow this. We are at March highs. If you look at March the 6th, I think it was, and March 13. So basically it's a 74K level. So as a sidelined, I think it's easy to be cautiously bearish, and that's my case. I will be cautiously bearish here around an obvious range high. However, I do believe that even though it's not going to be fun to watch, because as I said, I'm sidelined currently, but I do believe that if we find acceptance above that 74K level, then it's going to be a free ride towards 80K. I'd like to have Purdue's take on it, but I think it's a free ride to like 80K at least. And 80K, in my opinion, is going to be the real deal. If we get above that level, then I think we can say the bear market is invalidated. If we reject, then we stay in that high time frame bearish trend, as Follis just said. So yeah, we just play level by level. If you're not positioned here already, I would say avoid trying to long because it's a resistance. Wait for like a clear acceptance above the 74, 75. We had few attempts that failed for now. However, the rejections are not sharp enough to say sellers are in control. So I think they just like hitting some sell walls, but they're still trying to fight back every time we get they're getting pushed back, which is a good thing if you're bullish. It's also a bit hard to short right now, but I think it's the most logical play considering we are at resistance. So yeah, to sum up, just play level by level. Try to stay neutral. I think also altcoins, but I'm pretty sure we're going to talk about it a bit later. But altcoins are offering more returns on investment when you try to long them. Currently, they're a bit stronger than BTC for a few. I'm thinking about the ones that we mentioned quite a lot during the last roundtables, the previous roundtables. Tao Hype, especially showing insane strength. So I think it's worth having them on your list and trying to long the pullbacks if it happens on these tokens. And yeah, of course, also keep in mind that we still have like weird headlines lately that can play with the price, the volatility as well. Tomorrow, you said it already, we have FOMC that will obviously bring volatility.
UI.
Just a quick word about FOMC. I don't see how Powell can be dovish. I'm expecting him to be pretty hawkish, especially considering that we had hot PCE data, and the PCE, just like something people might ignore is that the PCE is not released by the BLS. So it's not, to say it short, it's not released by the Trump administration. This is why we had a divergence between CPI that was quite cold and the PCE that was really hot. And the hot PCE occurred before the surge of the barrel price. So you can assume that if we had inflation increasing before the increase of barrel prices, then Powell knows as well, and there is no way he can be bearish, right? He can be dovish, sorry. So expect hawkish Powell. Let's see how the market react, because he's going to leave in May, right? His mandate is going to be over in May. So let's see how the market react to whatever he says. And the second thing, we have the Bank of Japan statement as well following the FOMC the next day, so on Thursday. And the last the last words from the Minister of Finance in Japan is that you should be prepared for some Forex volatility coming, or some, I don't remember the word, but basically some fuckery on the Forex market. So we can maybe imagine that they want to intervene again on the Forex market. Last time we had, it was not crazy, but still we had a small dump on the market. So keep that in mind and play accordingly, depending on your risk appetite, depending on your current positioning. As I said, and it's going to be my final words, if you're sidelined, then don't fall for the FOMO. Just wait for a clear direction after either a rejection or breakout here, and then you will be good to go. And I think it's just a matter of a few days.
Cool, thank you. I'll just do a quick share myself because there was a couple of things shared in the chat that I think I just want to touch upon. So yeah, Follis mentioned this. I think it was Follis that mentioned this, and Sis posted this in the chat. So this is the like the expected price of Bitcoin, like its true valuation, realized price. So we haven't gone through any bear market where price has not dropped below that. So what we're looking for now with this realized price is a move below 50k. I still myself think that is quite likely this cycle. Something just to mention as well. I think if we're looking for shorts, because we're in such a nice uptrend recently, if we look at the last 8 days as well, we've only had one day, and that was on Saturday this week after we got a flush on Friday where we even took out the previous day low. So it's, whilst we are at these range highs and it is very difficult, like you certainly can't be looking for swing longs. It's just the return on a swing long when like the maximum you could realistically expect out of that is like a move up to 80k and then a bit of a rejection. It's just not like, it's not realistic here. So shorts for higher time frame plays do make sense. However, when we actually look on the lower time frame, we are maintaining quite a nice uptrend recently. And for me, that just means like nice two-sided trading. You can take either side of the trade. If you happen to catch a top, or if you happen to catch a nice dip, then that's pretty fair. There's some quite nice levels below that we can look at. So as always with traders, we just have to trade with what we're given. This is looking a little bit far ahead. I'm not convinced, looking at the momentum that we have now, that we're gonna get to 80k. Like certainly, like it's going to become harder as we come into, especially as we come into this resistance that we're seeing up here, where we've got this little order block here. So it's going to become tougher. We are going to get some down days, and at that point, it's just a case of whether we can hold on to like key supports. And right now, like your point of control is a long way down. So the range is still playing out for me. But on the flip side, there's no reason why. Also, like from my point of view, despite the fact that I am also pretty convinced that we're in a bear market. Well, we are in a bear market, but there's no reason why we can't see this like a rally that starts to, like, we've had these bear market rallies in the past, so you just have to be aware of what's going on. I think that we see lower prices myself personally. But it's just a case of trading at level to level and remaining realistic with like what your targets are. And when you're day trading, then it becomes quite straightforward anyway, because eventually you're just gonna be able to catch something. I've been in a bear market. Well, actually, no, I had a nice bull market when I first came out here. Anyway, I think we'll move on to another topic of discussion. So I was going to let's talk about the macro first, because Osbra mentioned we've got FOMC coming up this week. We've got PPI this week. We've also got a ton of other stuff going on. Like, from my own personal opinion, the market is paying a lot less attention now to things like the FOMC and to things like the CPI and the PPI, because the whole market is distracted by what's going on with the whole US, Iran, Israel situation. That does seem to be calming down a little bit at the moment, but that doesn't mean that it's going to continue calming down. I'm sure there's going to be other things that happen over there, which is going to bring more volatility into the market again. We also, I don't know if this is going to be Powell's last FOMC or if he's going to have one more, but I mean, we're not going to have rate cuts. There's not really going to be anything too groundbreaking that's going to be said. He is leaving soon. So if any of you guys have thoughts on the macro, then it'd be great to hear your thoughts on that. Osbra says 99% priced in, no cuts. We're not going to get a rate cut, certainly. I guess Osbra, as you before, or Pudgy.
No, yeah, like I think the price action is pretty telling that we ran up into the FOMC already, and mostly these FOMCs get priced in, especially with 99% no cuts this month. I think also with Powell ending his term in May, that yeah, we don't really know how much impact all the news driven events will have on the price action, especially on BTC at the moment with the US Iran situation. So I don't think it's going to be a nothing burger tomorrow, but it definitely will have a lot less impact than we usually see, in my opinion.
Yeah, I agree. Anyone else have any thoughts on that? We'll have that as a general open question because I know Osbor's already.
I would say I kind of agree with Purdue, and this is what I said just before. Considering Powell will leave the office in May, what he's going to say is ultimately going to have a lesser impact than it had before, because he cannot, for example, he cannot talk about long-term plans for the Fed because he's going to leave in 2 months. So even though he's really hawkish tomorrow, the market might think, okay, it's going to be hawkish for like a month or two, and then he is going to be replaced. I think the FOMC events are going to matter again when Kevin Walsh is going to give his clear, how can I say, roadmap for like the monetary policy. And for now, we have no date, and I don't think it's the most important thing right now in the USA to talk about monetary policy with what's going on. So yeah, let's just wait for Kevin Walsh to say what he has to say. I think the most concerning thing is what's happening in the Middle East. Something that happened also over the last couple of days is how the NATO countries said fuck off to Donald Trump when he asked for help against Iran, and I think this can cause issues when the war is going to be over, because Trump is probably going to be mad about it, and he stated it before, like months ago, that he wants to get rid of NATO because, according to him, USA is just paying for NATO, and then NATO gives nothing in return. So he doesn't really like to be part of it. So let's see how it's going to be. Regarding the war, I think that Trump is starting to lose credibility, and whatever he says, the market doesn't really care. The only issue, and I think it's going to be a big deal, if it starts to last more than a week from now on, with the oil prices staying relatively high, like above 90, above 100, it's going to start to be a real problem. And then the market might start to acknowledge it and to react accordingly, because the economy cannot sustain with barrel prices being this high. Inflation cannot tank it. The consumers cannot afford it. So it's going to be a real issue. And at the end of the day, if the consumers cannot pay for it, then what's going to happen? The DXY is going to be the safe haven for everyone. Everyone is going to be in need of cash. And when everyone is in need of cash, then obviously the risk on assets are just suffering from it. So that's the thing we should be paying attention. It's almost like we can ignore the headlines. What we want to see if is it going to last for too long or not? I think if just a few days, it's fine. But if it start to last until April, maybe beyond April, it's going to be a real issue.
Yeah, that's really good. I just seen Full as asking for Jedi's hot take. I know.
Something.
Jedi.
Sorry, just adding something very quickly. Also, pay attention to the bond market, because it's also telling, right? You can see like if the bond market is going like crazy high, it means basically that people are expecting higher rates to be high for longer, and also expecting inflation to be high for longer. So it's also an indicator of what the market is expecting. So for now, as of today, the bond market is going down a little bit, but overall it's up since the beginning of the war, of the conflict in the Middle East. So also pay attention to these things. And I see
Cool.
Jedi
Yeah.
just joined, so it's probably
Yeah,
ready.
nice joiner. Any hot takes?
Yeah, I think good afternoon or good evening from this side of the world. You know, the thing is, I was actually thinking about this yesterday because I knew we were going to do the roundtable, and the thing that was playing out in my mind is I honestly don't really know what the hell is going on at the moment from the crypto side of things. Like I see what's happening obviously in the Middle East, and you know, oil prices have been such an integral and central part to this whole kind of you know, like, how do we understand the markets? Well, I don't really understand the markets like at that level, to be honest with you. Like, you know, like when oil does this, then the ramifications from that are X, Y, and Z. Like for me, I'm not trained in that kind of thing. My training extends to shitcoins, and you know, when Bitcoin does something, I kind of expect shitcoins to do that, and then I kind of bet on that. And then having to understand war, oil prices, and my rationale tells me that, you know, 2 + 2 = 4. And in this case, well, if there's war and there's uncertainty, then surely crypto as a risk on asset should be going to Hades.
We lost you.
Nice
Should be
quote.
going to Hades. That's the end of the hot take.
Jedi went to Hades. Jedi is in Hades.
I got kidnapped
Come back, brother.
before he said the truth.
Yeah. That's a nice place to end. Yeah, I mean from from my perspective, I just try and stay in my lane. I'm a trader, so whatever's going on with with what's going on in the macro, I don't tend to pay too much attention to it. A couple of things that I found quite interesting. The US is still saying that the war, like they're still expecting it to end in a couple of weeks. There's some news coming out today that Strait of Hormuz is like everything's calming down over there. Ships are being allowed passage once again. And the other thing is, like, we've got to remember, like, it's the US that's kind of the instigator in a lot of this, but the actual effect on the US market from what's going on with this war in regards to oil, I think is a lot less than people make out that it like for it to be, because they get I mean, the vast majority of the oil that the US imports is from Canada and Mexico. It's not really they're not the ones that are importing oil from that region. It's going to be going to other countries. So that's something that I'm paying attention to. I don't really like have too much of a thought on. Again, I just like to trade, and I'm quite thankful that it's giving us some volatility, which is nice. We've had an overreaction to the downside. We're getting not an equal reaction back up, but it is a reaction nonetheless, and for me that's quite positive.
Let's say you are a macro trader, you know, then your job as a trader is to identify how much is the news priced in already. And I think the moment that the Iran war started and we already had the big capitulation wick at 60K, and we made it like a higher low and we couldn't break that 60K, I think that was pretty much telling also for bulls to kind of step in and have your clear invalidation, because how much worse can it be when a war starts and you have the 60K bottom, but the price doesn't reflect that it wants to go lower. Then I think your job as a trader is to identify that and to act upon that. And that's what we basically saw during that weekend.
Yeah, for sure. Cool. I think we'll move on to another topic. So I want to go on to some psychology now.
Sorry, Luke. Just
you're back.
Apologies, I got disconnected. We all know that Purdue kicked me. But just coming back to what Purdue was saying now, and it's like I've got a question to ask around that. And obviously, you're right, dude. I mean, you're spot on But now let's look at it from kind of like the emotional side, and we can cover the psychology of this as well. Is that so? Bitcoin's sitting at like the low 60s, and there's this war that's about to break out. And yes, there's a retest and there's a reprice as per the post analysis of this thing. But when it's happening, I mean, how do you actually know at that point in time, which you don't, but how do you have conviction to say, you know what, I think this is the bottom and World War III is about to break out, but I'm still going to commit to this thing? I mean, I just find that scenario, and it keeps on playing, whether it's war, whether it's tariffs, it doesn't matter what it is. It's kind of like, how do you get your head around that dynamic of like, okay, well, I'm committing to this whole thing. And after having been wrecked 20 times over the last 12 months, for argument's sake, to then have that conviction and that commitment. I mean, how do you cross that fucking chasm, that bridge?
Yeah, I mean, the Russia-Ukraine wars is still going on as well, and in the meantime, we hit all-time highs. Like, eventually, it's becoming a nothing burger, and people just move on. Even if the war will last 1 or 2 or 3 years, eventually the price won't reflect it anymore. I mean, if the thing with the Strait of Hormuz keeps on going and the oil prices skyrocket again to like 150, 160 per barrel, yeah, of course, then shit is going to break in the system. But I think as long as that doesn't happen, and I think there are too many people involved, higher powers involved, that they will keep the oil price below that 100 per barrel for now again. So yeah, but that's another discussion, of course.
Yeah, I kind of think the same. It's like the reaction is generally the overreaction. So when we get things like this that happen, it happened with COVID. So before things started to get really bad with the COVID situation, the low came in like right at the beginning of that, and then it's like the world starts to adjust, but the prices don't have to keep going down. In the same way that I said last week, just because things do calm down, it doesn't mean the price has to go up. It's just simple whether the demand is there and whether that can then be sustained. So that's why for myself, I just purely just go on the price action and don't like think too much about events. And with the oil price as well, we have to remember that it's like, what, 10, 15 years ago, the price was 3 times what it is now. And if you're adjusting that to inflation, then it's going to be significantly more. So oil prices aren't sky high, and it's not like a major deal at the moment. If it turns out to be that way, then of course the market's going to react accordingly. But for things we can't control, then you just have to trade what's in front of us. But yeah, going onto the psychology, because I want to talk about like the bear market in general. I think so I'd like to get your guys' thoughts on how you're like, what's changed for you when you're trading a bear market. How do you approach it differently? And also, like, what is it that keeps you coming back to the charts every day, basically? Because we've seen a lot of toxicity in the space, especially over the last couple of weeks. There's been a big backlash on trading influencers. I don't know if people have seen like stuff about, I don't really know them, but there's Tory Trades and TGR and people saying, oh, these people are fake, and yeah, they're influencers, and I won't share an opinion on that either, because I probably tend to agree with a lot of them. And yeah, a lot of other people who have been good traders just dropping out of the space. We've had people just leaving crypto Twitter. We're having like firms and groups and all of these kind of things just shutting down. So it's like a bear market in all senses of the words, where people are leaving. But what is it that keeps you coming back every day, and how have you had to adjust your trading to be able to cope with this and still be profitable and still enjoy being here? Because for me, I'm enjoying it. Like I've said this a lot of times before. I really enjoy the bear markets. I quite like them. They're a lot nicer to trade. A lot less taxing emotionally, because I don't really have to think about too much about what's going to all-time high. I just trade what's in front of me and ignore the rest. So yeah, Pergy, if you have any thoughts on that as well, and then we'll go through the panel.
Yeah, I mean, it's all part of the cycle, you know. You have these euphoric times where you keep winning together, and your portfolio hits all-time high after all-time high and after all-time high. And in ranging, you just have to adjust, which usually comes with some losses first, which you have to deal with. But yeah, I've been here for 6 years now, and yeah, eventually you get so emotionally drained that your dopamine receptors don't respond to changing environments anymore. And yeah, that's also part of part of trading, you know. I think especially doing this with a team like around me, and I think that's a big tip I can give to other traders. Just talk to other people as well if you want to learn how to trade or want to learn from our IDs. I think it's super important to have like a small group of people where you can share your IDs with, and that's basically what we're building with Chroma here as well. And this is not a sponsored talk, by the way, but I think that's what keeps me going. If I was solely trading on my office day in day out and have had none of you people around me to share my IDs with, I think that would be a very lonely type of job. So yeah, what keeps me going is that I can share my IDs with the group, and that yeah, we're like getting the best out of each other every day in day out. And especially what I'm liking the most from my job is that I do the fundamental analysis a lot. Of course, I research new projects, and that's what I really like about being a trader. And I think everyone found this edge in some sort of way, and I found it with doing my research, like we saw with LiDAR, for example, or the Aster pump today, or Tria, which I missed unfortunately. But that's what, yeah, when the fundamentals align with the technical analysis, that's really what I get my kick out of.
Cool. I'm going to go on to Bitbei in just a second, but we have 10 minutes remaining. So I'm going to combine this with also asking, like you mentioned about finding your edge. And another topic that I wanted to discuss here was like, how do you find those like potential gems for like, as we're going into we go into the next stage of the cycle? Is there anything like particular that you look at when you're looking at altcoin research, that you have like red flags and green flags that you're just, okay, this looks like a good project, or anything that you would just be like, no, I'm not interested in this, I don't want to be investing in this? So any advice for the people on how to find those next 100x gems that are going to be here?
Yeah, when like, for example, when I do my research and I look for the token generation events for the upcoming month, then I mostly see 10 or 15 projects, and then you have some layer 2s, you have some cross-chain shitty projects, you know, and then I think, nah, that's not for me. But the things that you actually use, and I think that's very important this cycle, like people want to have products that actually work, like a decentralized exchange, and that's why Hyperliquid is still so unique, and that's why I still think LiDAR is undervalued at 300 million market cap. And that's how I find these coins. Like, are they undervalued at the moment, or are they overvalued at the moment? And the same with Tria. They have like a super nice working product. They're building like a neobank at the moment. So I think that is going to take off as well. And especially at 60 million market cap, if I compare them to, for example, one of their competitors, which is Crypto.com, I think it's super undervalued at 60 million because they have a super nice working product. And Crypto.com is like 4 billion market cap from the top of my head. And then I think that doesn't match at all, you know? And that's how I find these coins. I'm not really like a tokenomics geek. It is important, of course, but I think pricing projects at the right price, that's where my specialty comes in. Like, if it doesn't align with another product or one of their competitors, and they're actually building something better, then I think, okay, this is definitely undervalued. And then I just trust my gut feeling about it, and I just go for it. And that's how I find these gems.
Yeah, that's really cool. I used to be, I think within the last cycle, I haven't really been doing it so much this cycle. It might be something I get more into. But like, that was a big thing for me, was trying to find those massively, or like new projects that are just massively undervalued. Taking a look at things like the like what the VC rounds were and the vesting in particular. I think was quite not necessarily the tokenomics because that can change over time, but I think vesting always has quite a big impact.
Yeah, definitely vesting. Yeah.
I don't know if I'll move on to Bitbei in a second, but as we're still on altcoins and fundamentals briefly, Jedi, do you have anything like green flags and red flags for finding those good projects for yourself? If he's still here.
I'm still here. I think it's a great question. Yeah, I think it's obviously a really good question, and I think Purdue really kind of like, for me anyways, I think he's managed to get something to work that generally would work more so in a bull market, and he's made it work in a bear market, which I find is actually quite difficult. But I think that just comes down to being really diligent around where does the value lie, So if you can identify where the value lies and kind of bounce those ideas. If you've got an idea around something that you think is undervalued, just ask, like go in a chat and ask people that you can test that kind of bias or that theory with. Purdue does it all the time. He'll like say, what do you guys think about this? Like in a private channel, and I think that's how you find the excitement and you find the desire to actually want to succeed in the space. For me, it's slightly different. I love the fundamental analysis stuff. It's obviously like my biggest thing, but I also find that the narrative driven side of things really is a lot stronger in the bear market because you don't have that dilution of capital. So if there's a narrative that's running and you manage to identify it earlier on, you can really do well if you get in early to it. And then the problem with that is that it's a lot more volatile and a lot more risky because you a lot of the times get the so-called narrative wrong and you'll end up placing a bet that doesn't win. And then the other strategy for me is, and I've spoken about this numerous times over the last few weeks, and that is that I'm very much on the lookout for where the scam pumps are happening. I think that's like a big part of it. And I've been really, really successful the last 2 months around that. It's been really cool and it's been really fun to the extent that I don't go out looking for those trades. It's kind of like I'm not sitting, like you get in that mode when you trade and you want to like be in it and you want to be constantly like involved. You know how cool it is to not feel that all the time? Like I can't tell you how awesome that is for me. I don't know about you guys. And that's just because I'm watching for where that volatility is. I think, Luke, it's a little bit, if not a lot of what you've been doing as well. Like I've kind of picked up on that energy that you've put out there and it's really worked for me.
Cool. Yeah. I mean, I think it is really nice. Like the nice thing about the bear market is that there's not this constant fight for attention, right? So you're not getting 100 different altcoins that people are talking about all the time. So if there is a narrative that takes off, it has actually quite a decent chance of being sustained. And I remember in the last cycle we had things like Casper that did incredibly well during the bear market, and that was my one like 100x that I had in the last cycle. Got into it really early and profited really well from it. But it's these projects that when there's not that kind of noise around, if you can just find like the ones that are creating noise, you can generally trust it a little bit more, because the nice thing about the market now is that a lot of the people that just came here to make a quick buck and were like being paid to promote shitcoins, they've all gone. They've all like lost their money, or they're no longer here. So where there is noise now and where there is hype and where there is a narrative in the market is in this current state, you can actually trust it a little bit more, which I think is really good. So it's a good time to be doing that research. Like you have to be a little bit careful. I think we're still fairly early. Again, as Forrest was saying, like, and I think a lot of us agree, we're still maybe only halfway through what this bear market is going to give us, and we're still likely to see lower prices. But when these narratives emerge, and we're seeing it with hype, we've seen it with some other stuff as well, then yeah, they tend to be pretty good. One final thing before we wrap up, we did want to go over this, but we're talking about edges, and I want to ask Bitbei because myself included, like my thing was always order flow trading. Like when I got into trading, that was like the thing that really, like, I found it fascinating. I was working with like the early order flow platforms and learning a lot about that. And I think it's really coming back now, especially with Market Monkey Terminal. They've just made that free. I know that's something that I use often, and the Bitbei uses a lot as well. So yeah, just going into what your edge is and thoughts on that. Just general thoughts on order flow, how it helps you with your trading, how you've maybe had to adapt your trading within the bear market. I think this is your first bear market, right?
Yeah.
And yeah, just
first bear market trading, because I survived 2022, but I wasn't a trader. And actually, I never traded. I started trading like when Trump became a president. So it's not really like I traded in bull market either. It was the end of the bull market, but not the beginning where everything goes up and you just long everything and it works, you know. So yeah, the way I spent a good amount of time in Chroma first as a student, of course, as a member, and I was interested also in Perdu's way of analyzing coins and stuff, because I find this cool. The only issue is like it doesn't really work well with the psychology. That's what I learned myself. So I decided to shift away from trying to find the gems, trying to find the narratives, and try to go more into something that's basically more suited for my brain and how I process information. So I'm more like a scientist guy. I like to understand why things move, why the price reverse here, why it pumps like that, and reasons. But I want to put numbers behind these reasons. I want to say, all right, at this level there was a massive amount of people who sold aggressively and didn't manage to push the price lower, so it reversed, because that's the natural way of action movement, of price movement. And just like how water will always find the easiest path to go down in a river, so it's kind of similar to me. And this actually clicks a lot, and that's why I got very interested with order flow. So one very good news, like you said, is like recently the MMT terminal, which was a paid tool, became free. So I'm gonna share rapidly, and it became free. It has some limits. So if you don't have the premium version, you can't have like 500 different indicators and 500 different charts. But the template I'm showing here is a template that you can use for free. Just like create an account if it's not already done. And in this, I try to put everything that's, let's say, relevant. The most relevant things you want to have when you trade order flow with the free account. And yeah, it's the way if you want to find it, you can go to layout, go to community, type Bitbei. I know that Osbra also made some of his templates public. So if you type Osbra, I'm pretty sure you can find, Osbra. You can find all his templates. I don't know if he adapted for the free version, because I know he created these templates quite some time ago. For me, I had to adapt it. But yeah, on this template, you see the order books, like the amount of people who are willing to sell with limit sell. You see these bubbles, aggressive buyers or sellers. Then you have the footprint chart that tells you exactly the difference between buyers and sellers on each candle, which I love to see. And then after you have more figures, you have data here, which can be scary at first. So don't worry, we can explain a lot about these things. But basically, this is how you can spot absorption, divergences, things that don't make sense, like why people are buying like crazy and the price isn't going higher. Kind of weird. Maybe it's more bearish than I thought. You can see a lot of stuff. And also on this tab, which is still part of the template, you can see the CVD over a longer period of time for perps, spot, and OI. So I'm not going to explain all of them, how it works. I'm already doing that a lot in my streams. I'm sure you do as well. Luke, Osbra. Osbra is no longer here, but Osbra does it as well. With a one-on-one mentorship, you can ask me, Luke, and Osbra to have more details about that. And for the next weeks, starting like Thursday, I can spend more time during my live stream explaining how things work about order flow.
Yeah, thank you. Yeah, I think what you say about like having an understanding really of exactly what the market is doing is so important. I've been someone that's always said that, like, if I can't see the reason why a market's reacting in the way that it is, I just don't trust it. So that's why I've never been someone to use. You have all these things like the market cipher and that kind of stuff that give you these signals of like buy now, and I'm like, why? Right? So with order flow, it was one of the again, similar to you, it's just one of those things that clicked for me. Just being like, right, okay, I can actually see why the market's reversed here. I understand it now. And then the beautiful thing about that as well is like I don't anymore tend to check what's going on like with the order flow anymore. I'm not looking at like exact numbers and things like that. But you just gain that understanding of like, right, okay, this is what we're seeing here. I know there's going to be divergence here, or I know we're going to have excess, like at that wick or something like that. But yeah, I think we'll be going into that in a lot more detail. I think now that it's available and accessible for all, order flow content is something that I think will be really useful, and I know that's something that a lot of you guys have been asking for. I know we have run 5 minutes over time as well, so I think unless we have any final thoughts from anyone, any final hot takes, we will wrap it up there. I want to say thank you very much to our amazing panel for joining us. Yeah, anyone with anything final to say, or should we just we'll call it?
No, thank you. I would say I have one spot available this Friday if someone wants to have a one-on-one, and I explain order flow, everything from A to Z. Then that's
I'm
my
gonna
last
book it.
message. Yeah, I can. I'm more than happy to have a one-on-one session with you, Perdue.
Thanks everyone for watching.
All right. Thank you guys, and we'll see you again.
Thank
We'll
you.
see you next
See ya.
week.
Thank you.
Bye bye.
Bye-bye.
Thank you.